Well, it's been a mixed week on Dalal Street. The Nifty and the Sensex are down for the second week in a row. But the broader market has actually fared a lot better, though the Nifty continues to consolidate. That's the headline. On this week's edition of Editors Roundtable, we'll, of course, decode the week gone by, all the trends and the top movers and shakers. We also put the spotlight on the big block deal buzz. There's no stopping those big block trades, and we saw several of them this week as well. So let's straight away get to it. I'm Surabhi Upadhyay, and with me, my colleagues Nigel D'Souza and Nimesh Shah, as always. And joining us on the show today is the lovely lady in pink, Devina Mehra of First Global. Devina, what a pleasure to see you here in person. This is a welcome change. So thank you so much for making the effort.
Thank you, and thank you for having me. And your guest relations are very persuasive, I must say.
They are.
Good to have you, Devina. And it's good times actually from a market perspective, from a personal perspective as well. And earnings season hasn't been too bad. We've come to an end of the quarter four earnings, which were not expected to be great. But they weren't too bad. What's in Nimesh? I mean, in comparison to expectations.
Oh, yeah, absolutely. Especially in the broader markets, but there was too much of pessimism and it's not disappointed. So that explains that despite, 2 weeks of flat Nifty and Bank Nifty, the broader markets have outperformed. So, even your call, have you looked at the broader market in terms of earnings? Have they disappointed? Have they done well?
Actually, I mean, in terms of what has happened in the markets, I was just looking at some of my podcasts from February because that was the time my book launched. So I did a series. And everywhere I am saying the same thing, that if you are waiting for a correction to invest, have you invested? So, and since from February, you can see how the market has done. Especially, of course, the Nifty, but even the broader market has not done too badly. So I mean, my position has not really changed. So I was never really that negative on the markets, and the kind of correction we saw is pretty much par for the course. If you look at 18, 20 years of data, every year you see that kind of move, and 23 you did not have a double-digit correction at all. So after 2 years, this much was expected. And yes, I mean, not just the earnings, I would say on the economy side also the news has not been bad. I mean, inflation has come under control for one, so that gives lots of room for RBI to do things. And for that matter, not because of so much the rupee, but the fact that the dollar has been depreciating against everything else again gives a little bit of room to the RBI. So in terms of policy, there is also a little more room than there was, let us say, 6 months ago.
So you think you've not been negative on the market. You think the correction is firmly... the question is, will we see more race towards better levels in our highs, or are we expecting more consolidation in the next few months? What's your sense?
That's always hard to say. Very short term, Surabhi, I never give a prediction. I never give a prediction in January or in the new Samvat starts that what do you expect, what's the Nifty target for 1 year, because that is something you cannot know. I mean, that for 30 years I've never given a number. So, but as I said, the point is that we are doing not badly. So it's always difficult to call the exact bottom. So nothing to say that the market can't fall a bit again. But always you have to look at the risk reward, which is that what is the probability and extent of the downside versus the probability and extent of the upside. So that's the way to look at it. And this is a data point I've given earlier also, that even in 40 plus years since the Sensex started, if you missed out on the 10 best days in the markets, you missed out on 2/3 of the return. You would think 40 years, 10 days is nothing, but that's 2/3 of the return. And the returns, that kind of mad up days don't come in a mad bull run market. They always come when people are questioning that should I be there, should I not be there, or as was the case 2 months ago, should I stop my SIPs? That was the question I used to get in open forums, that should I get out of the market? I said you should think of getting out of the market only when things look very, very good, as was the case in 2024. I mean, not that you should, but I'm saying that's the only time you should actually think of it, because like in 2024, I had even family offices coming to me and telling me, my expectations are not crazy. I'd be happy with 30-35% compounding. I said, like,
red flag.
Very modest.
Right. But Devina, as you said, macros for India are looking pretty okay. You have the rupee that's fairly stable, crude oil prices being at very, very low levels. It's not that much of a worry when it goes up in comparison to, say, 2 decades or so ago. But it's still a positive from an India perspective. And the RBI, it appears that they're more focused on growth right now. So the macros are intact. The problem is in the globe. because we don't know what's going to happen in tariffs. We don't know what the central banks out there are going to do. Right. In this sort of a backdrop, I think you just come back from overseas. What are your interactions with a lot of the big investors indicating? I'm not sure whether you went on personal or
no. I mean, I'm not looking for cues from other people, but as I was telling one of your colleagues that I write this fortnightly column for Mint.
Okay.
And while I generally write on investing principles, somehow in the last 4 columns, 3 have ended up being about Trump, because there's always so much news coming out of there and every day something is changing. But of course, also remember that people think that whatever US does will be reflected in the rest of the world, but that's not always the case. Because the basic principle in markets is that themes change, whether it's countries, regions, asset classes, industries, the themes change. So if you look at the recent past, Europe has been outperforming US quite a bit. In our global funds and portfolios, especially since January, we've been underweight US, we've been overweight Europe, we've been overweight China for a little longer than that, we've been slightly overweight India also. So, and there can be a disconnect. Again, if you go back in history, if you look at 2003 to 2007, for instance, and it wasn't as if that US was coming off a high, it was still pretty down there after the tech crash. And still in those 5 years, it didn't do anything much. And in those 5 years, the emerging market index went up nearly 4 times. India went up 6 times. After doing nothing for 9 years, India went up 6 times in those 4.5 years. And Brazil went up 10 times. So markets can decouple. So, I mean, that's like just a story made up afterwards. So there are times, I mean, the NASDAQ high of 2000 was not breached decisively till 2015. So it took 15 years. So, I mean, people just extrapolate the recent past, ki 10 saal US has done well and everything was kind of lagging but moving along, but doesn't have to be that way. I was anyway looking that at some point the US outperformance would end. And I think Trump is hastening that end.
Yeah.
I mean, if you'd asked me last year, I would have said it's still abhi time hai, no, not that much. But like now, he is hastening the end of that outperformance. And more fundamental than just the immediate market thing, he's hurting something basic in what US has been, which is why markets have been treating US almost like an emerging market, because this is like the bond prices going down and the currency going down is a classic emerging market crisis situation. You don't expect the so-called risk-free rate of the world to behave like that.
Absolutely, but that's what perhaps when these things, it's difficult to wrap your head around it, that in the mecca of capitalism, the president of the country calls up one of the largest publicly traded companies and says, hey, you can't make your phones here, you should be making them here. This is real, this is 2025 and it's actually happening right in the US of A. But anyway, very quickly, just to recap the stats from this week. What have we done this week in the market? Absolute consolidation at the index level. And the market's been going through the fag end of earnings season. So the action has been very, very stock specific and the broader market has done well. In terms of the global setup, it's been more about dealing with this uncertainty on tariffs, because now we have a new element. The new layer is the legal layer that has been added to it, with the matter moving first in the International Trade Court in the US, and now it's gone into the Court of Appeals. So that's added a layer of uncertainty. India has underperformed both the US markets and European markets this week. That is something we cannot take away from at the index levels. The US market, by the time we are doing this discussion on Friday, they've done 4 days of trading. They're up about 2%. Likewise for many of the European markets, whereas our Nifty has been down, coming to the levels then. Down about 0.5% on the Nifty. Mid-cap index 1.4% higher. Small-cap index 1.5% higher. Very, very stock-specific action. Winners of the week, the PSU banking index actually has done really well, 4% up, and on Friday there were lots of PSU bank stocks that were gaining 4, 5, 6% or so. In contrast, the bank Nifty has risen only 0.5%, though it's better than the Nifty's fall of 0.5%. Capital market plays still fine takers. That index was up 3.5%, and the defense space still flying high for the week. The defense index has put on about 2.8%. Earnings hits and misses, just to recap, because we've actually had a good number of earnings hits as well, though it was the last week of earnings season. Suzlon, Cummins, Triveni Engineering, a lot of these stocks coming in and surprising the market very pleasantly on the upside. But then you had the misses as well, and 2 clear standout misses from the defense space, something we'll discuss with Devina as well in a bit. Mazgaon Dock, collapsing 7-8% on Friday. And Bharat Dynamics, very, very weak numbers coming through. So what's the focus for the defense space? We'll talk about that. There was also Amara Raja SJB. And so mixed bag of earnings is what we've had this week. And then the block deal bonanza. Just a reminder, you had Interglobe Aviation, you had ITC, BAT, British American Tobacco, coming out and selling a big stake in the market. All of it snapped up. Sagility, PG Electroplast. So the block trades have been keeping investors very, very busy as well. Going forward, it's RBI policy next week. We have to watch for that. And the direction of flows as well, which flows actually have been fairly positive. The question is, are they taking the cash markets higher, the regular markets, or is all that money getting absorbed in the block trades? And we'll watch for this as we go forward.
Yeah, that's right. I just want to add on to that because, Devina, in this month, that's the month of May, we have seen large trades with promoter catching out close to around 58,000 crores. The last time we saw this sort of a number, I think, was in August 2024 when we had
70. How much of that was ITC?
ITC approximately
13,000 crores.
So I think we'll get the breakup as well on the screen. So this is always a risk, right? Markets do well, sentiment is good. Promoters say, let's take some money off the table. So I wanted your view on that, but I'll just go through the data points first. The mutual fund industry, remember, they were sitting on very high levels of cash, more than 2 lakh crore. That was roughly around 7% as a percentage of the equity AUM. And if you look at it, a lot of large trades in the month of May. Bharati, there was close to 13,000 crores. ITC, that was another 13,000 crores, where BAT took some money off the table. They sold 2.5% or thereabouts. Interglobe Aviation, well, Nimesh told us in detail. Mr. Gangwal, well, he's been taking some money off the table, but he's been taking money on the table from around 2,000 rupees all the way to 5,500 rupees. And still he's been finding buyers, and the stock price has been undeterred with what's happening on that front. There's a couple of other smaller trades. JSW Infra, we had PNB Housing Finance, Paytm, Nuvama Wealth, a lot of trades out there. So, Devina, earlier, say around 10, 15 years ago, when you say promoters taking money on the table, the street got very jittery. What's going to happen next? Is this the sign that, he's taking some money? PG Electroplast, the stock, the way it's done in the last few years, it's up more than 10 times. And now the promoter sells close to around 5%. But they're finding buyers and good amount of demand out there. What do you make of this? Earlier it was perceived negative. Now it seems it's fair. Market digests it. Okay, let him take some money.
It's not just marketing digesting it. If I was advising the promoter, I would advise them to take, basically diversify your holdings. That is only prudent on how to manage your money. It is to diversify, not have all your eggs in only one basket. So it is not always a negative. It becomes a negative like last year at one point, it was not just 1 or 2 weeks, it was months of this. Then you become a little jittery. Also because last year, if you look at the IPOs, also a very big chunk used to be offered for sales, either from promoters or from venture capitalists. So when that becomes a pattern, it's a bit of a concern. But like, BAT selling ITC it is a one-off thing where I think they feel they don't control the company anyway, so they may as well cash out some of it at a good price. So if you really have to break it down. But as I said, when it goes on for months on end, that's when it becomes a bit of a concern as a pattern for the market. Otherwise, in individual cases, there is always a case to be made, usually a case to be made as to why you should diversify what you're holding.
Well, indeed, last year I was just saying in 2024, when Nimesh and me, we speak at around 3 p.m. And as Nimesh what said, he said, guess what? There's another large trade. There's another promoter wants to come.
That's what I'm saying.
There's another QIP. There's another OFS.
Somebody was telling me the other day, this is the best time to be a promoter in India. Large cap, mid cap, MNC company, you name it, and they can sell as much as they want
anything
and in cash, and without any major stock impact.
Right.
You get impacted for 2 or 3 days, but then stock bounces back. I did a piece last week on Indigo. The Ganwals have sold stakes from September of 2022.
That's what you were saying.
The only time they sold the previous block at a discount was the second block. After that, every block has happened at least at a 25 to 30% premium.
That's as much as that, 20-30%.
20-30% premium to the previous blocks, and they've done some 6 blocks till now. The first block at 1,800, the last block at 5,500. So, we've seen a massive, re-rating. The other thing I wanted to ask, Devina, because you've seen the markets for so long, and you've looked at a lot of history data. One thing between the leader and the incumbent, and there are so many examples. Like if you look at Indigo also, Indigo is at an all-time high. SpiceJet is virtually at an all-time low despite raising so much of money. Same is with Bharti versus Vodafone. What's your take? Should you be with the leaders?
That is not true of all industries. I mean,
Which is why I'm asking.
Aviation is a particularly outlier example to take, because aviation.
No, but
I say people forget history. Aviation mein there used to be all these Damania, East West Airlines, Modi Luft, was all those gone. Then the next lot was this Jet Airways, SpiceJet, Kingfisher, which also
I think
gone.
It's a unique that Indigo is the only company which has made
But
money.
like for example, if you look at two-wheelers, it is not as if that only one company took everything.
No, but again,
Bajaj Auto, Hero, TVS, everything is done well.
They've carved out their space in the market.
Or for that matter, Eicher, which was actually
extrapolate to other sectors as well. We spoke about aviation. Look at telecom. Vodafone is struggling. Bharti is at an all-time high.
Telecom is an oligopoly industry again.
Again, Ola versus
and then Jio came in and that again, changed the dynamics completely. And also remember, telecom. This is something. I'd done some more than 15 years, probably 16, 17 years ago, which is that it has a natural limit. Telecom is because the number of people in a country has a limit. It is not something you will, in terms of number of subscribers, there's kind of a natural limit. And that's the pattern if you see in every country in the world. Telecom formed a particular pattern. So the Ps are high at one point and then the subscriber growth kind of tapers off and the Ps compress. And so that's how it goes. So again, these are not it cannot be extrapolated to all kinds of industries, whether it is FMCG or autos or whatever, or for that matter, even banks. It's not as if that winner takes all is the story.
Speaking of FMCG, now just about beginning to hear some positive chatter around the sector, because it's been down in the dumps for I don't know how many years, right? Growth has not been coming in. But now with monsoons being favorable, etc., there are some pockets of the market that feel a revival could be coming.
Yeah, I mean...
Do you agree?
Yes. I mean, last two rebalances, our systems have liked more and more FMCG names, and we are now overweight FMCG.
Oh, okay.
Otherwise, like in 2020, when it was the hottest thing, I had done a half-an-hour program with your channel itself saying why FMCG doesn't always do well. This whole, myth that it's a predictable industry and therefore predictable stocks. Again, even if something is a predictable industry, the stocks don't always do well, so which people forget. But now the cycle, so the only company which we had bought early, I think in 21, was ITC, when it was not favored as a FMCG stocks. But now more and more FMCG stocks are coming higher in our rankings, and we have.
So anything that you'll have bought of late that...
So FMCG, as I said, in the January and April rebalance, we have added.
And what are the likely triggers that you see ahead?
I think it is not even, the stories often follow. So, I mean, of course, one good thing is that food inflation is down. So, in a household budget, food was crowding out the shampoos and the soaps and whatever else.
Yeah.
So, now that one negative is gone. Also, overall growth has, again, people were talking about consumption slowdown after the market fell. But actually, the consumption slowdown happened in 23-24. Private consumption in GDP was at its lowest level, less than 4%, after 21 years. So it actually picked up in 24-25, but people thought of it only because you need an explanation as to why market was falling. I said this year it's accelerating. So overall consumption has been accelerating. As I said, food inflation coming down is a big positive. Overall, even crude going down, generally the inflation of other things has gone down. So,
Devina, you want to give us a few names?
No, I mean, there are quite a few. I mean, there are some smaller players also. It's not just the larger ones.
Okay. All right, we need to take a very quick break, but the conversation is going to continue. We'll be right back in a moment.